Ladies and gentlemen, welcome to the Capital for Small Businesses session, moderated by Olena Gryniuk, CEE Regional Manager of S.p.A Banking Club, with the participation of Ruehmer, co-founder and CEO of Q-Lana Inc., Mattia Ozzello, Network Services, Product Manager of S.p.A, Jimmy Hanna, co-founder and CEO of Furlough.
So thank you for the introduction, and we can start our panel. So the topic is devoted to the capital for the small businesses, and there are three of us. Jimmy did not manage to come yesterday to the personal reasons, so we will start. So we will be two of us, Christian and Mattia, and just wanted to mention that, the access to the finance for the SMEs, we are discussing this topic every year on different events and conferences, and this topic is still remaining very relevant because especially when some crises are happening, SMEs are getting restricted with the access to their financial services. And we see also during this pandemic, banks restricted their credit policies and actually cut off SMEs, at least at the first very beginning of it, from their access to the finance, letting them stay with their own problems, with their financial gaps, and also taking into account the delays from the counterparties with payments. This was very hard moment for the SMEs. And this is also a very good moment that we discussed during the Alternative Finance Forum, because for the SMEs, really now, alternative finance is becoming a real chance to get finance. And today, with Christian and Mattia, we would like to focus on the digitalization of the financial services for SMEs as a way to accelerate and facilitate access to the finance. So we will start from the presentations, and then we will have time for the questions here from the audience and online. So you're welcome to participate in the discussion. So let us start, and Christian, please be the first to present what are you doing and how you're helping banks and other financial providers to increase and digitalize SME finance.
Thank you, Olena, and thank you very much for everybody being here. I'm equally excited to be at this conference, and I usually talk very fast. Now I was told that we are only two presenters, so I have a little bit more time. I try to speak a little bit slower and bring a little bit more background on what we're doing at Q-Lana, as we call ourselves the human side of digital lending. It's a platform that we have developed specifically targeting SME banks, because we have a very strong belief that there is a strong role for SME banks in dealing with SME entrepreneurs that has been largely underestimated, specifically by the banks themselves. Because SME entrepreneurs do need financial partners, they need advisory, they need support. And SME banks have something that fintechs and others don't have, which is knowledge about their customers. The fact that they are working with their customers for 5, 10, 15 years has a tremendous amount of value that is underestimated, because it's really the experience of dealing with these clients, understanding these clients, and helping them where they need to grow their business. That's not the only way. There's a role for more digitized services as well, for fintech products, of course. But do not underestimate the traditional banks. If they start using the convenience of multiple channels, if they start using digital as getting better, getting more efficient, there's actually an interesting value proposition. Specifically when it comes to also lending, because in many cases, and we've seen this in the pandemic, it's not just about getting the loan out. It's working with the loan officer during the pandemic, understanding how help can be provided, how restructurings can be assessed, how can a client be refinanced. That's all where traditional banks are helping. On the other hand, of course, we need to automate, we need to digitize. So we have a pressure on cost and cost efficiency. And we have to make sure that these banks are really operating well. Finally, and this is a major thing that we're using at our platform, is the fact that we have to make sure everybody gets used to the platform, gets used to using the thing and doesn't look awkward, and they don't get fearful. So when we deploy, we usually deploy 1 or 2 service employees full-time with the bank to make sure that every user knows how from changing passwords to using the application. What we see as success for digital SME banking is both the fact of qualitative information, meaning every meeting visit, every visit report, every client interaction, if you track that, if you store that, make it available inside the institution, there's a huge benefit. Performance data is something that core banking usually does not provide. They just give you an accounting data, but we store the information, make sure it can be analyzed over time. And one thing that's absolutely essential is our monitoring and early warning system, because for most institutions, they don't look at a loan that has been disbursed until the client doesn't pay anymore. Talking about risk, a risky loan is a loan that pays today but doesn't pay tomorrow, and we need to use an early warning system to discover them early on. That's what we have implemented as well. And then, of course, the fact of implementation. The way we work, just very briefly, this is a slide I usually don't show, but I take advantage of having a little bit more time today. So this is our structure. We have the various databases for companies, contacts, facilities, and collateral. We combine them to projects, ship them through a workflow, extremely flexible. We can replicate any workflow that we want. Our last client had 400 workflow steps, and we were proud to really replicate each of them to their full satisfaction. Aside from that, we do collateral management, pre-disbursement, financial analysis. We can track hedging and funding transactions as well. We offer a version for funds that works. We do monitoring. We have a client portal, reporting, valuation, and document management. So everything in one platform available for the bank. Just a few screenshots to show you how the application looks like for one of our clients, the development bank in Rwanda. Just to give you an idea, we can create financial models. We can create documents out of the screen, so they can really develop their term sheets, their loan agreements right away. We also are advising, helping the clients getting better in each step of the process, from client acquisition, loan application, recommendation, approval, the processing, the KYC checks, the monitoring, and the collection. At each of these stages, we help with our team to really improve the way how banks are doing business. This helps in the end, giving clients multi-channel access, giving efficiency management. We have, of course, risk management, risk advisory that kicks in over time. Knowledge management, we have collaboration, collateral management, document management, and really a variety of things that you can do over time. With one of our clients, we start developing small apps that they can hand over to customers to do inventory management or booking system that allows them to really improve the data that the SME is generating. Rollout planning, let's skip through that. But basically, what is key for us right now is that with all this data that we have, we put the bank in a superior position to have more knowledge about their customers. So they should be able to do better lending. They should have better credit decisions about SMEs, which usually they always claim is an obstacle for doing SME loans. Now, if that's the case, then we come in with our next product that we're currently launching, which is called the SME Lending Fund. A bank that manages the loans on the platform. We are willing, with this fund, to purchase half the loan, right? Up to 75% actually of this loan, in a way of direct risk participation, because we have full transparency about how the bank is managing that loan. The bank now can go out and say, the client, for example, asks for a $200,000 loan. The bank only has appetite for $50,000 because that's their risk limit, that's the appetite they have. The fund can do the other $150,000 based on a either a syndication, a co-lending agreement, or a silent participation, a funded collateral, depending on the respective regulator's approach, such that once the loan is done, the bank only has to reserve capital for $50,000, not for $200,000, and the fund takes the risk, including the risk takeover. That's something that we have, but we have currently in the making. If the clicking works, then you can even see more. Sorry?
Yes.
Hold on. Where am I? Okay. Anyway, so basically what I just said here is the idea that we're trying to unlock the SME funding gap by really taking the challenges that SME lending provides, meaning the lack of information. We're improving this through the platform. We get the bank to become something that they are much better at than actually lending, which is the information provider, the knowledge provider, the contact to the clients, and bring in the risk capital from the outside through a fund with international investors who are ready to take on SME loan as risk and collaborate with the bank. Most of the impact funds that we see very often try to replicate an infrastructure inside the country, neglecting the fact that actually the best access to the SMEs is still through the banks. So if you really try to get closer to the SMEs, if you really try to work with the SMEs, help them also in collection and in long-term development, then working with the bank is almost like a requirement. The fund will do that, and let me just see again. This is just broadly the structure. There is the lending fund, which will work with a fund manager. We are in the process of selecting one who is established, but not in the impact space. We will work with the banks, call them investment partners, as well as guarantors who are available, working with commercial and concessional investors to build this lending fund. The first fund will be either in East Africa or in Central Asia. We have to decide this by the end of the month. But we'll come out with the mechanics. So basically, every bank that works with us will sign a framework agreement in which we define the rules. During the loan approval process, the parallel assessment of the fund will happen. And after the loan is being approved, the exposure is being monitored on the Q-Lana platform. We're trying to get out of this out by the end of this year, at the beginning of next year as the first fund, trying to get live in the first quarter. We think this is a way how we can unlock the funding gap and hope to have an interesting discussion actually here to see what the first reaction on such a product could be. Thank you very much.
Thank you. Thank you, Christian. Yes, interesting topics are raised, and except the digitalization, also the hybrid lending is an interesting topic that you touched with your fund platform. Yes, so let us discuss all the questions after the second presentation, and also please prepare yours. And Mattia, you're welcome to present S.p.A. and what you are doing with the banks.
Thank you, Olena. Thank you, everybody, for having us here and the opportunity to explain S.p.A.'s vision and S.p.A. chain to an audience that is present physically here. It's amazing, so you can also appreciate my body language. So as an Italian guy, you may know that communication skills rely a lot on body language, so you can appreciate the way I can move while presenting. Before going into deep details of what is our vision on blockchain, I would like to take the chance to speak a little bit about technology, so the central word of our payoff today, and also to speak about its little brothers on steroid, that is innovation. So how can a company understand when is the moment to adopt an innovative technology? How can a company understand when is the right time to take the journey of adopting a new technology? Well, that's a very difficult and tricky question. My understanding is that you should focus on innovation from an inductive way. So you need to start from the problem determination. There is a common way of saying when we speak about innovation that is an innovation tool is like an hammer, but not everything is a nail. So by adopting an inductive way of analyzing things, you can actually start focusing on the nail rather than on the hammer. At the very first beginning of the blockchain hype and the way in which companies approached blockchain, everybody started to look at blockchain and say, okay, I will use this hammer for everything. I will adopt the blockchain in every part of my life, and it will be the only way of exploring new business model. That's not the right approach. I will try to give you a couple of ingredients, at least 4 to 5 ingredients that you can actually think about when you want to adopt blockchain or other innovative technology in your company. So specifically speaking about blockchain, I do believe that whenever there is a process that involves a lot of different actors that need to read and write information on a common ecosystem, and when this ecosystem has a problem of trust, that's a right approach. That's a right process in which you can adopt blockchain. Not only those 3, but you only need to think about ecosystem. So the larger the ecosystem is, the larger the stakeholder view are, this is an important process in which you can adopt blockchain. For example, if the transaction in which you are thinking about your business model are time sensitive, so you need to prove when a transaction occurred, and you need to prove that that transaction has occurred among different checks that cannot be provided by a single intermediary, well, that's a good process. So whenever there is a trust problem, a truth problem in which intermediaries cannot solve it, that's a good way in which you can approach blockchain. So I started from the problem determination in thinking about this innovative technology, but it's not the only part. There are few more parts when you need to adopt a new solution. For example, you need to think about which is the business model, which is the governance model of a solution that rely on decentralized infrastructure. What is the operation model of it? Well, S.p.A started this journey in blockchain answering those questions and leaving the problem determination to each use cases to the small and medium enterprise that knows the best for their own business. So we started, I'll start a little bit speaking about what is S.p.A. So S.p.A is a large company that was founded in 1977 in Italy. It is a technological provider that provides infrastructure solution for financial institutions, corporates, for central institutions, and public sector. Those financial infrastructure are basically involving three different areas that are cards, acquiring and issuing, that are payments infrastructure, and are network services that actually connect those different institutions to different financial markets. We are in a merging process with another company, another two companies, which are Nexi and Nets, to become the largest paytech industry in Europe. In this company, with such a long history, innovation is definitely a long journey. So when the blockchain journey started for us, it started back in 2016. So we started analyzing what was the problem for our customers. So what was, we started from the problem determination, as I mentioned. So the problem while adopting blockchain was, I have an idea, I don't know how to put it in production. I can reach the POC phase easily, but I cannot scale it to production because of several issues. The issues are always governance, operations. They are basically a way to guarantee that each actor of a blockchain ecosystem has the same level playing field. And the blockchain ecosystem has a particularity that I do believe it's typically for this ecosystem, that is the success came only if large players and small players cooperate on the same network. So the blockchain ecosystem that doesn't have the small and large players together, well, that's a problem. So you need also to provide a solution that is scalable for small players. So we started designing what we call the S.p.A chain. So S.p.A chain is basically infrastructure that is relying on blockchain technology that is provided to small and medium enterprise, to financial institutions and to corporates in order to use and access what are the capabilities of blockchain, such as non-repudiation, such as immutability, and such as auditability as well. We started sharing this vision to central institutions, to regulators back in 2016, and we are still doing it right now. So we shared it with Bank of Italy, with the European Central Bank, in order to understand if the process and the journey is correct and it's applicable for an oversight company such as S.p.A, because it's overseen by Bank of Italy and the Central Bank of Europe. When we addressed the fact that there is a problem in guaranteeing the level playing field for each actor on a blockchain ecosystem, we actually created a service. So a service that embraces different areas even on a decentralized infrastructure. So we started thinking about deploying an help desk solution that helps the users to access support services for blockchain solution. The incident management process, it's definitely a standardized process made by person that knows how to solve problems that are occurring on a decentralized infrastructure, as well as orchestrating the release management. These are technical features, but actually are made out by person, and these processes are the one that helped us in going in production during a global pandemic. So last year, we actually deployed the first use case hosted on S.p.A chain that is called Spunta Banca. Spunta Banca is a business network, so it's made by 104 Italian banks that are using blockchain on a daily basis in order to process 1 million transactions each in order to reconciliate their mutual accounts. Those 104 banks are using S.p.A chain due to the fact that the service model helped them in having, for example, their nodes hosted on premises, hosted on their data center. The connectivity layer is another layer that is provided by us, so we can guarantee the service level agreement not only from the infrastructure point of view, but also from the connectivity point of view. And most of all, the most important service is the network services. So when you need to orchestrate a blockchain-based network, there is a ton of service that relies on, for example, the release management, the orchestration process. You need to install the application, the distributed application on each node on the 104 banks simultaneously and run the test performance for all of these banks. Another very peculiar fact of what we achieved is that among those 104 banks that are using S.p.A chain, there is the largest bank in Europe, among the largest bank in Europe with 30,000 employees, but there are also tens of banks that only have 10 employees each, and they're using blockchain in a production environment. So it is possible to use this technology also in production environment for real use cases that solve a specific problem. I want to tell you about another use case that we are deploying that is focusing on small and medium enterprises. So we are deploying a blockchain network that is issuing and certifying digital sureties. So tens of different corporates access this network in order to ask to their own banks and insurance company to issue a digital sureties on blockchain. On the same network, the public administrators or the guarantee, that publish a public tender can access and see the digital sureties on the same network. And by using blockchain, they can avoid the risk of fraud, because every transaction, every change of state, every user of the initiative is actually certified. If it's not certified, there is an oracle that can provide a certification. So we are connected with external oracle that can provide certification of who is the company that is entering this kind of network. With this initiative, with the digital sureties, we are able to reduce a lot of cost of the fraud and help the regulators to access it, to see it, and to oversee the full life cycle of it. Thank you.
Thank you, Mattia, for your presentation. Okay, so now let us start the Q&A session. First question will be from my side, and then I will encourage you to raise your hand and ask your questions. So my first question will be to both of you, maybe Christian, if you don't mind to start, and then Mattia, you. So as you are cooperating with the banks in the digitalization of some operations in the bank, so from one side, we all, and banks, and now what we discuss, that we all understand what are the good, what are the good sides of having digitalized processes, right? So this is a cost efficiency, this is the really personalized offers for the small customers. This is offers which can be done in the business context, meaning that, for example, if we talk about alternative finance, that factoring, for example, is offered to the customer in the moment of issuing the invoice, for example, and not when this may be a need for an SME customer and not, for example, 9 in the morning when, I don't know, customer is doing something else. So this all digitalization can provide, and banks can really have advantages on that. And from the other side, we see that still there are not so many implementations. So as we are at SME Banking Club are covering Central Eastern Europe region, and we do the analysis on an annual basis on what services, financial services are available for SMEs in digital channels. And there is an interesting situation this year, and a good one, that, for example, for the factoring services, this year we saw that the number of the fintechs, factoring fintechs, is really bigger than the banks that are providing digital factoring for the SMEs. For the lending area, as it was a bit restricted during the pandemic, now we see this year, compared to the previous one, we see not so many banks, not so big increase in the number of banks that implemented this digital process of, I don't know, like, to say like around 100 banks in the CE offering or servicing SMEs. We have around maybe 20 now at the moment have at least partial digital process. So from your experience with cooperation with the banks, what are the main challenges and how to overcome them?
Right, thank you, Leonard. I think the main challenges lie in the history of software implementation, because for every banker everywhere, the next release of the next core banking system was like the biggest horror scenario that you could have in your life. Yeah? Something is not working, it takes not 2 months, but it takes 2 years. It has lots of hassles, weekend works, and then in the end, you get the new system and it doesn't do anything the like of what you expected, but rather, oh yeah, that comes in the next release, yeah, or whatever. So it's the lack of trust into that digitization environment, combined with the fact that most of the banks don't really have a really full vision of what digitization means. It's usually the case that somebody in the business side wakes up and says, oh, I've seen a fintech product, I like to have this as well. They go to the purchase department, they run an RFP for yet another piece of a mosaic without even having a big frame in place where that mosaic fits into. Yeah? That leads to another set of frustrations. If you would go out and would really take the effort of just stop acting for a moment, just think about what you really like to do, build a complete digitization framework to which you add the components, then I think the acceptance would be much better, and also the acceptance around the staff would be much better. I had situations where people were working half an hour to change their password on the system because they were just fearful of changing the password. In the meantime, they posted twice on Facebook that they are currently changing their password. Yeah? It doesn't get more ridiculous than that, but this is still the reality, so we have to not forget that we have the people. We always tell that banks are inefficient, but hey, if we tell the people working in the bank continuously that they are inefficient, they will start accepting that and they will start being slow in new products. We need to work with them. We can't replace the complete staff. We have to work with the existing staff and guide them to become digital employees as well, no matter how old they are. Thank you.
That's very interesting, Christian. I can share also a story related to our network, our experience. So when we started looking at blockchain with those banks, those Italian banks, they started thinking about, okay, we should digitalize a process, and they indicated what process was. The process was the mutual reconciliation account process. Okay, so we started looking at it. That process was relying on a law that was dated 1974. It was never changed. So they started thinking about, okay, we should work on that law and we should develop an application that helps us in digitalizing the process related to that law. Okay, so they started looking at applications that are provided by different system integrator. And the digitalization that they came at that time was just that instead of sending each other emails in order to reconcile their accounts, they could send messages toward the application in order to reconcile the mutual accounts. But actually, the process was still the same. The effort that the people had was still the same. Then we analyzed together with them the possibility to use blockchain, the possibility to actually use a distributed ledger technology relying on core enterprise. With that technology, we were able to create a smart contract that actually translated what was the law of the 1974 with just a small change. And by using that smart contract, that is a software that is executing on the blockchain, the people that are using the mutual reconciliation distributed application were able to just send, let's say, just investigate the 6% of the overall transaction, because 94% of the overall transaction are managed and mutually reconciliated by the smart contract itself. So that's digitalization. It's not just using an application, but it's making a system, an information system work for you, actually. So digitalization came in different areas. We can speak about the digitalization of cash, which is, of course, something that is could happen, but it's in charge of the euro system and the central banks. We can speak about digitalization of execution of agreement. That's something on which we can work towards smart contracts. We can speak about digitalization of goods. I let the small and medium enterprise work on that because they are the goods providers, so not anything can become digitalized. I don't see groceries become digitalized soon. But I think that's an opportunity for everybody to start thinking in an inductive way on the problem, digitalize it, not only by using a system, but having that system working for you.
Mm-hmm. How long did it take you to implement this?
We started studying it in 2017, actually from a slide. The first slide was 2017. So we implemented it in 2020. Okay. During the global pandemic, okay. So this is important for me because we were able to launch a production environment on 10 different data centers in Italy involving 104 banks during the global pandemic of 2020, after, of course, 2 years of development of that application. But now that we have the infrastructure, developing further application, it's easier because actually you have already created the auto route, the autobahn.
Mm-hmm. Mm-hmm. Christian, and the question to you, how long does it usually take to cooperate with you for the banks, meaning how fast this digital lending process can be implemented from your experience, because there is a way to overcome these old core systems, right?
Sure. Well, it depends on how well structured the bank is and how well they indeed follow with their processes of what their policies say. There might be usually a difference between how they actually operate and how they think they operate. But it's somewhere between 3 to 6 months for a go live, and thereafter about a year, 2 years where we work together on improving. And when I say we work together on improving, think of it like you did your first PowerPoint slide. Yeah, back 15 years ago, it was awful. Huh? But it gets better through practice. And this is the practice that we're offering over a year, year and a half with the institution to get better on the use of the system. But it gets to go live, and we insisting go live within 6 months, because otherwise it gets too theoretical and expectation gets too high to really start practicing and start using, knowing that not everything is perfect at the beginning. But yeah, that's reality.
So then your solution is used as a white label, right, for the bank? How you do?
We put our little logo somewhere, but in general it's white label, yeah.
Okay. Maybe let's get back to the question of blockchain, because this is an interesting topic. Mattia, firstly to you and then to Christian as well. How to accelerate access to SME finance by the usage of the blockchain? Because what we see, I mean, the technology itself looks really optimistic in the sense of the usage it in the factoring, maybe trade finance, supply chain finance for small businesses, for corporates. What we see here in the region is that really it has been used, except of the example that you put now from Italy, maybe 2 transactions from other bank, ING did one for the big corporate customer for the supply chain finance, and I think that's all. So like the technology, it exists, it really looks good in sense of this, that this is decentralized, the transactions are real time, I think we can say this. Then if the transaction is done, it cannot be cancelled. Everybody can access, so you can track maybe even the delivery of goods. So in theory, of a lot of credits and guarantees, etc., can be issued in blockchain, but this is not still here, so this is not at scale. And I think that, as you mentioned, as it is also decentralized, that reminds a really great cooperation between everybody, between banks, buyers, sellers, regulators in all over the world. And this is tough, actually. This is tough. How do you see this?
Definitely. So when we approach this kind of technology for small and medium enterprise, I love always to say that the way to approach is a co-competitive way. So you actually need to involve different actors, small and medium or large, it doesn't matter. The fact is that those actors need to be cooperative on one end, because they need to accept that they're using a decentralized infrastructure, so an infrastructure or a protocol or a platform that actually has data that are owned by different actors, but they also need to be competitive because they can actually build a new business model on that. So for example, on the digital surety side, we created what is the business requirement together with everybody. So all the banks that are competitive within each other helped us in creating what are the business requirements that works for everybody. So what is the standard line? But then each bank has its own right, or each insurance company has its own right to create a business model. So to actually implement further innovative solution on that platform in order to still have a competitive advantage within each other. So that's the way in which you can actually start by, let's say, taking 2 steps behind everybody, but in order to make one farther at a time for each actor. So actually, they are starting now to making the first step in advance, and the first mover are the one that actually can gain more advantages in the near future. So the one that actually start making those steps after having make a little step behind.
Mm-hmm. Can you predict whether we will have it on scale in several years or not?
No, it's hard. The market, also the market is very, very volatile on the permissionless side. So
Yeah.
I can predict, but I saw in the earlier panel, which was very interesting from Mark, and related to identity. So I see identity and also the system that was presented for keeping the private keys on the end of the owner of their own heartbeat was very interesting. So identity is something that really will be a game changer on that area.
Yes, and also with the cooperation with central banks, actually on blockchain.
Yeah, definitely.
I think that's interesting. I mean, if you come from the background of still most of the banks out there in SME lending purely working on collateral-based lending. Yeah? And if you then take blockchain as a way to either facilitate the existing collateral or make more products as collateral available.
Or tokenize them.
You talk.
Tokenize.
You talk. You get in the right direction.
We need the cash on chain.
Yeah, so
we need the digital euro.
However, in the end, and I'm not contradicting here, but I'm saying that in the end, we still need to navigate more towards cash flow-based lending in the end. So this is still the assessment that is largely unavailable in the regions, in the banks, that they look at the forward-looking cash flow instead of just only collateral. Yeah? This needs to be established, and here's again the cash flow-based lending, where I think the level of trust, the level of confidence, the level of assessment, whether an entrepreneur who plans with a capex to double, triple, quadruple the size of his traditional manufacturing enterprise has the capacity to do that. That's something where trust relationship needs to come in on top of the collateral and on top of the blockchain technology where it's not working. There are niches or there are areas, you said factoring, you said service industries where this is perfectly fine, but if you still talk about a traditional manufacturer who has maybe, the only collateral he has is the machine he tries to purchase, then it's still a difficulty to make that loan unless you really have experts in cash flow-based lending in the end.
Yes. Do we have questions from the audience? Yes. Can we have a microphone or just without? Just we can hear you. Please ask.
That's probably easier for me.
Yeah.
Can you hear me?
Yes.
Well, first of all, I would like to thank all 3 panelists. I think you make a very comprehensive listing of all the kinds of advantages that the generalizations of blockchain based solutions could bring to in terms of identity, security, integrity for the operations, and also in terms of user friendliness and comfort. And earlier in the earlier panel was also the case was made for the need for greater collaborations among all players and the need for an adequate regulatory framework. But I wanted to ask you more particularly about the financial benefits. I know that you said earlier on that this forum should be about technology and purpose rather than money, but if you don't mind me asking the M word, are there any studies at either national, European or worldwide mentioned trying to capture the billions or trillions that we can expect from this move to digitalization, either for the whole economy or more specifically for the financial sector? And any idea about the order of magnitude of the gains that the whole industry can expect over the next decade? I think would be interesting to share with us. Thank you.
Who would like to start, Mattia?
Okay. Okay, thank you for the question. That's a great question. So I will take the part of technology. So I will get your questions such as, okay, we heard about blockchain, we heard about its possibility, but where are we standing? So of course there are a lot of studies on the hype cycle. So Gartner is the main one that is providing hype cycle studies every year. And we see that what we expect, like we think that we are already late, everything is already passed, and maybe it will be just an hype boom. It's actually not the reality. So we started looking at this technology right now for business opportunities, and the way in which the market can react, the way in which the market can grow, it's quite huge. It's quite huge. It depends, of course, on what will happen on the regulatory side on a thing. So, for example, it's coming the MiCA regulation that is regulating what is the regulatory approach for cryptocurrency exchanges, for crypto assets, for stable coins, for a lot of new stuff, as well as the pilot regime that is another regulatory that is coming in 16 months. So, there is a way in which we can approach this new business by also having a law that helps us in going into production without having the strict need to access, for example, a sandbox. So right now we are in a phase in which either you have a back office process, you have something that actually it's not so much business oriented, you can go in production. Then if you have something very disruptive, you should access a sandbox. In the near future, it will be like, I hope, this is just my vision, you can access, you can actually go in production even with innovative products without while having a regulatory approach that helps you. If you want a number, I don't know how much bigger the market can be. We'll see next year Gartner's prediction.
Christian?
I don't have much to add here. I mean, I don't know of any studies that have proven that. I go by pure anecdotal evidence that the better you manage your own information, the more you can cut out middlemen or unnecessary steps. in various sectors of production, specifically in less developed countries. So therefore, that's my anecdotal evidence of functioning, but yeah, I might be wrong.
I can add here from some information that we are receiving from the banks in the CE region. So actually the digitalization brings like money in two ways. Yes, the first, these are the new revenue streams, and the second is optimization of the operational cost. So if we talk about the new streams, the new revenues, this is mainly this digitalization is bringing new customers, both to the banks and to the fintechs, because SMEs are mainly due to the manual processes, are not covered by trade finance, but by factoring, and not the first customers for the lending. So this sector is just undercovered as is, and this can be used as a competitive advantage of the banks. So if the processes are digitalized, they are cheaper for the banks, they are for small tickets, the risk is measurable, the fraud can be also tracked because this is digital and simpler now. Then all the revenues you earn, this is what you can get. The market is really underserved. Like if the fintechs that I was mentioning regarding, for example, in the factoring area, if we look at the percentage of the market share of these online lenders and factoring companies for SMEs, this is very small. This is up to 3%. Of the rest of the market is open for the for the innovation and grabbing the revenue from it. Regarding the operational costs, the numbers that I saw from the bank's reports, and just maybe as an interesting thing, is that a lot of banks, and this I can say for surely in Poland, they are obliged to publish their strategies on the websites, and usually they do the reporting on what they gain from the innovating and digitalizing. So the average number that I remember from the reports is like up to 20% of the decreasing of operational costs due to the automation, robotization of the back office mainly processes. So these are the numbers. Okay, so any more questions? Okay, so then my last question for the panel will be for you is that what are your main lessons learned for the last year during the pandemic in terms of business, in terms of your solutions, and what are your nearest plans for upcoming years?
The pandemic is, let's see, not from the business perspective, but I think the pandemic showed again that we learned very little from the past. I think I lived pretty well lived pretty strongly through the financial crisis in 2007 and 2008, and I think the main underestimation of the financial crisis in 2007 and 2008 was that we underestimated the significance and the duration of that. We thought it's going to be over in 1 or 2 weeks, or 3 weeks, or 4 weeks, or 5 weeks, and it took us 2 years, 3 years, 5 years. Yeah. When I remember, we went into lockdown somewhere in March of 2020. The first notifications were, yeah, stay home for 2 weeks and then we continue. Yeah? And I think part of the frustration that came that we were not very clear about the extension of that situation. And the fact that we are wearing masks here as well shows that there's not a post-pandemic life, but it's living with the pandemic right now. So underestimation of the outcomes, underestimation of the effects is something that has created far more frustration, disruption than necessary. If you would have been more clear early on that this is not something that solves within a week or 2 weeks, or, I mean, think about it yourself. When was the first time you realized it will not be over until vaccination comes in? Yeah? We always thought at the beginning this will be, by the summer it's over, and then suddenly we said, okay, vaccination first. Now we know that we haven't even vaccinated half the population. So this is one of the things that I thought was largely underestimated, and will just lead to, just a better adjustment of business activities. Yes, more online. Look, I'm working as a consultant for the long. I've worked from my home office for the past 15 years, so I was kind of used to that. At some stage, always say that my family missed my travels more than I did, so they sent me out to travel again. But that's I think, the main learning aspects here. Yeah?
Okay, thank you.
Yeah, and I agree with you, Christian. Definitely, everything was the same for us. For me, in Italy, was exactly the same. The fact that pandemic improved a little bit the way in which we interact also in our company. For example, we had the possibility to actually work a little bit on empowering people towards innovation. So we took the chance to stop for a moment and think about, okay, what are the outcome of this pandemic? What will happen in the next 10 years? Of course, we don't know yet, but we actually look at the future on a more realistic way, in which we see technology changing a lot. We saw it changing our lives in just 2 weeks. So after the first notice, we just came to meeting my mother via Zoom. That was quite impossible to imagine, because she was not even able to answer to the phone, to their smartphone. So things are changing. We underestimated the way in which things can change faster.
Yeah, agree. Thank you very much. Thank you, Christian, Mattia, and thank you very much for your attention. Thank you.